Secretary Hui, what a pleasure to see you.
Same here, Tian Wei.
Now, good news is beginning from June, in fact, that RMB can be used to purchase Hong Kong stock shares. Now, many are looking at this as a significant step forward. How things are working so far?
As you rightly said, Tian Wei, basically we have 24 companies listed on our stock exchange having opened up their RMB counter, i.e. for investors, they can trade these stocks not just in Hong Kong dollar, but also for RMB. So if you take a step back in terms of why this is important, it is in the sense that with now RMB being widely used for trade settlement and also widely used as a reserve currency, with this accumulation of RMB offshore, there's a need for investors to see how they can preserve these value at the same time to use these for investment purposes. And this is exactly against this backdrop that we want to develop Hong Kong into a RMB product ecosystem, in the sense that we have a broad array of RMB products being made available to offshore investors with RMB in such a way that they can invest their RMB through these products. And the dual counter, as you mentioned, is exactly one of those. And in fact, before the launch of the dual counter, we already have more than 100 ETFs and also some insurance products having RMB. So it's not something new to us. But that said, what is important this time is that we now, with these stocks listed on our exchange, basically open up the RMB counter in such a way that the equity investors in our stock market can directly use RMB to invest in these stocks. And in fact, the purpose of our overall this scheme as launch is basically to ensure its stable launch in such a way that we can learn experience this time and gather more experience for us to launch more initiatives going forward. So far, as you can see, the dual counter has been operating very smoothly. And also at the same time, we have been seeing increasing interest from investors who want to use this counter. And insofar as the government is concerned, or our operator is concerned, what we are looking at is to ensure a smooth operation and launch in such a way that we can continue to grow this sector going forward.
The smooth operation, that's exactly the question I want to ask. I know there's already a lot of preparation work put beforehand. You put in a lot of personal efforts as well, Secretary Hui. On the other hand, what about the operation process? How much will that give confidence about RMB in the Hong Kong stock market?
As you can see, throughout these years, RMB internationalization has been gathering pace, because as our own country is becoming an increasingly important trading entity of the world, there is increasing number of countries who want to trade with us using RMB. So in this context, it's very natural for them to see how they can invest in RMB. And the stocks that are listed in our market is one of these options being made available to them. And insofar as what the preparation is needed, of course, we need the system change in order to ensure that our market, our investors, can use our platform to invest in RMB. And at the same time, the next step that we will prepare ourselves for is to connect these RMB counters on our stock market to the southbound Hong Kong Stock Connect, because the biggest source of RMB is definitely onshore in China. And right now, for those investors in the mainland, if they want to invest in our stocks through the Stock Connect southbound, basically they have to convert their RMB into Hong Kong dollar before they can buy our shares. But when we connect these RMB counters already installed in our market with the southbound flow, going forward, they will be able to use the RMB in their hands direct to purchase or to sell their stocks in our own market. That it will be a huge convenience for them, and also reducing the relevant exchange risk.
How have been the earlier preparations process been? Because that is going to be very important for all of us to understand, what are the nuances between the mainland and Hong Kong in terms of RMB, Hong Kong shares, and what is likely to be the prospect we can look at. What about your thoughts on what the process of preparation has been? What is the biggest takeaway you had so far?
I think you can see this from different angles. First of all, we have to prepare our market for this new product launch, because even though RMB is not something new to all of us, basically it is a new offering in terms of allowing people to trade our stocks in RMB. And also at the same time, basically these two counters are interlinked in the sense that for investor, they can buy in Hong Kong dollar in our stock and then sell the stock in renminbi in such a way that we can ensure that there is sufficient liquidity in both counters. And at the same time, apart from the system changes as mentioned, we have in place the market makers in such a way that they can quote prices for these counters to ensure that there is enough liquidity in these counters to facilitate trading. And also to allow these market makers who have sufficient financial incentive to make the market, we have, through the law change, waived the stamp duty, which is chargeable on these transactions of market makers in such a way that they have more financial incentive to make the market for these counters. Because after all, for any type of market, for it to fly, liquidity is the key. That's why we have to ensure there are sufficient market makers. And right now we have approached like 10 market makers, basically help to make these markets for us. And apart from these counters, I think I would want to take a more broader view in terms of how prepared we are for more launches of renminbi products in our market. Because after all, as I said right now, Hong Kong is indisputably the offshore renminbi hub for our country's offshore market. And right now, if you talk about the total deposits of renminbi, it's approaching 1 trillion renminbi in terms of total deposits offshore in Hong Kong. And all at the same time, in terms of the daily transactions of FX involving renminbi, basically over 75% of that takes place through Hong Kong. So in that context, indisputably, we are the offshore hub already for the renminbi offshore market. But definitely, we are not resting on our laurels. We want to do more and also innovate more. And that's why we take the decisive step to launch the dual counter this time. And hopefully, we will engender more interest in this market going forward. And also, as next step, we are also looking into ways to allow the market, in particular international investors, more risk management tools when they invest in the Chinese market. Because after all, as they get more exposure, either through the equity or bond ETFs, or like, for example, through our renminbi counters in our stock market, they also need to have more instruments to hedge and also to manage their risk, including the exchange rate risk or other risks involved in this renminbi trading. And that's why for the next step, apart from connecting our renminbi counter to the southbound Hong Kong Stock Connect, we will also launch the offshore bond futures in such a way that the overseas investors investing in the Chinese bond market with an additional risk management tool available for them, apart from the interest rate swap connect that we already launched some time ago under the northbound bond connect.
On the other hand, what about Hong Kong's economy? How vulnerable is it from your perspective, looking at the vulnerabilities of the global economies in different parts of the world? And now we are looking at Europe likely going into recession, US a mild recession as some describe, but China's GDP growth rate has not been necessarily improved as many would wish it to be, even though it is still growing steadfast. So how do you see the vulnerability of the Hong Kong economy as a result of all the other economies?
I must say, in fact, the Hong Kong economy has been highly resilient despite COVID and also all the issues just highlighted. If you look at the latest quarter of figures, basically we recorded 2.7% GDP growth in the first quarter. I think it's mainly attributed to consumption and also export of services, in particular tourism. Now, right now, if you go out in the street in Hong Kong, you see there are many people coming back, in particular tourists, who are trying to take advantage of the various destinations that we have for tourists around the world, including Disneyland and also our two museums, including M+ and also the Paris Museum with the generous donations from our own motherland. So all these basically has paved the way for our economic recovery. That's number one. And number two, if you look at other indicators, including inflation and also employment, I must say we fare much better than the rest of the world. And right now, for example, our inflation stands around like 2%. And also unemployment is only around like 3%. So all these basically are very favorable records vis-a-vis the rest of the world, and which we are very, very confident that as the economy moves further, we are going to maintain this data.
Geopolitics, of course, is always a factor in everybody's mind, no matter what you do these days. So looking at China and the US with the latest visit by the Secretary of State to China and some of the positive messages sending by both sides, how much prospect will that bring in terms of stability to the Hong Kong stock market and also the economy? But on the other hand, as you know, there's always mixed messages when it comes to the important relationship between China and the US. To you, what does that mean?
I must say all these geopolitical changes are not new to Hong Kong because as an international financial center, in particular, a comprehensive international financial center like Hong Kong, we are open to business to the rest of the world globally. And if you look at what Hong Kong can offer, I always say that we offer ABC to the rest of the world. For A is Asia, in particular our own country, China. Because for global investors, it's the place where they can find the rule of law, they find a very comfortable regulatory environment. So through Hong Kong, they can get access to the Chinese exposure. And likewise for mainland investors seeking global asset diversification. And that's why for A, definitely we bring to the world Asia. And for B, it's business as usual. Because even though you mentioned about geopolitical changes, issues globally, I think after all, it only calls for a greater need for connector globally. And Hong Kong is uniquely placed to be that because we have been a global center and also we are the most international metropolitan of our own country. And most global investors find comfortable here, operating here and living here. So in that context, business as usual exactly provides the right platform for global corporates and individuals to thrive. And that's Hong Kong, what Hong Kong will continue to be. And the C, I would say, is connectivity. Because after all, when people come to Hong Kong, not just about Hong Kong market per se, but more broadly about how we connect them to the rest of the world, and also China, in particular, the GBA, the Greater Bay Area. That's why we are diligently working on various initiatives to see how we can broaden access through Hong Kong to the Greater Bay Area. And for financial services, one thing that we're working on are enhancements to our GBA Wealth Management Connect. Because after all, we have Stock Connect connecting the stock markets of our two jurisdictions. We have Bond Connect as well. And for the Wealth Management Connect, basically, it is a connect program that we have at the banking level to allow individual investors on both sides of the boundary to trade the bank's products on the other side. And we will continuously to perfect it and improve it in terms of product offering and also the way the products are being sold in such a way that there will be more utility and also utilization of this channel.
Now, Secretary Hui, from the Hong Kong perspective, where you are, how do you see the importance of China as a whole to keep on opening to the rest of the world, higher quality growth, and continue on the reform path?
I think definitely for Hong Kong's long-term economic prosperity is closely tied to our own country's economic development. Because after all, if you talk about the emphasis of this time's Summer Davos, is about entrepreneurship, about innovation. That's exactly what we are after in terms of developing Hong Kong as an innovation hub. Apart from innovation per se, in terms of developing startups, there's also more bringing more innovative industries to Hong Kong. Hong Kong is also the place to nurture more financing capabilities for these innovative industries. Like, for example, back in 2018, we allowed the biotech companies with no revenue or profits to come to list in Hong Kong. And right now, we already have around like 60 of those companies. And we are already the second largest biotech fundraising center in the world. And just recently in March, we allowed the specialist tech companies with no revenue or profits come to list on our main board. So for our biospecialist tech, what we mean are basically a number of key industries, including advanced manufacturing, advanced software, environmental industries, agriculture, energy, so on and so forth. So I'm sure all these are pillars for a high quality growth, which Hong Kong can continue to serve as an international financial center.
What about financial innovation?
For financial innovation, I think it is something that we talk a lot globally. And if we talk about Hong Kong in particular, Hong Kong is a very natural place for them because after all, Hong Kong is already a very successful international financial center. So what we need to do is to see how we can transfer these successes into innovation. And by financial innovation, I think we can talk about this for an hour, but to focus on fintech, basically right now in Hong Kong, we have around like 800 of those fintech companies operating here. And in fact, they have a whole array of services being available, including RegTech, Green Tech, wealth management tech, and all these are closely tied to our successes across various segments of financial services. And also we have different types of subsidies and also talent programs to nurture our next generation of fintech entrepreneurs and also talent. And every year we have a fintech week, basically is normally takes place in November. And if we look at the key success factors of Hong Kong, I think one thing is about our international nature. If we talk about, for example, right now, not just fintech, but more broadly, the startup scene in Hong Kong, we have more than 4,000 startups in Hong Kong. And in fact, 1/4 or a quarter of them have their founders not from Hong Kong. And the reason that these founders choose Hong Kong to be a place for them to nurture their businesses is because they find this a very international environment, and also with the rule of law and expertise where they find it very comfortable to operate and also to connect to the rest of the world. And this is exactly something that we'll continue to work on and also continue to develop in such a way that we become a very global and also a very welcoming scene for entrepreneurs to operate here.